In this video, I'm going to show you how to use the different orders in your trading. So without further ado, let's get right into it. If you can see, I'm currently looking at Bitcoin US dollar. I'm using the website TradingView. The broker is Kraken. Currently, we are at 28,579.5 Bitcoin price. So if I wanted to enter right now, I would use a buy market order and it would get me in right away. So let's say we're currently at this current market price and I only want to buy Bitcoin when it comes, maybe it comes all the way down there. The order that I'm going to have to use is a buy limit. Just so that you understand why I'm using the buy limit, there's the acronym, which is BLSS, BLISS. You always put the BLISS below the current market price, below the line. BLISS stands for buy limit, sell stop. BL, buy limit, SS, sell stop. Which means that above, we've got the opposite. So the opposite of a buy limit is a buy stop, and the opposite of a sell stop is a sell limit. So let's keep that acronym in mind when we're discussing. So if I want to buy below the market price, if I want to buy BL, so we know that this is going to be a buy limit order. Basically what we want is once price comes here, when it drops here, I want to buy. And only when it comes here will we buy it, because maybe we want to get in at a better price. Similarly, if I want to buy above the current market price, maybe some people, they have different strategies. And let's say they say, okay, when Bitcoin comes above this point, it means that it's validation that we're moving upwards and it's going to go up. So that's confirmation for some people. They would want to buy above where we currently are. We would use a buy stop here. We're here, and we'd only get in once price comes and touches this point. So I've just shown you the different types of orders. Now let's talk about, you don't want to always be looking at your charts the whole day to know when are you going to sell, be it at a loss or at a profit. And it's always good practice to have orders set in place of when you're going to get out of the market, be it in a good scenario or a bad scenario. So this is where we introduce the concept of a take profit and a stop loss. The notion of a take profit is that I want to find a position in the market which is above the current market price, that I want to sell my position so that I can make money, because with any market, it's not always going to be going up or down. So I want to take advantage and I want to take money off the table at some point. So let's say, looking at this graph, I want to take profit here. So once price comes to this 29,975, I want to take profit. So now let's talk about the notion of a stop loss. So the notion of a stop loss is to avoid us from losing all our money. At some point, we want to get out the market if it reaches this point, because it's probably going to get worse and worse. And maybe you only want to lose 10% of your account rather than losing 90% of your account. Let's say in this graph here, maybe my stop loss might be here. Now you might be asking me, okay, I've got these two, but which sort of orders would we be placing in the market? So remember, we've bought some. So the only way that we're going to be able to get out the market is if we sell. We know that both of these orders have to be sell orders. Let's start off with the stop loss. What sort of order is it? If we're here at this market price, this is where we bought at. If it's a sell, I look here and it's an SS. It's a sell stop. So we know that I'm going to place an order called a sell stop at this area of 28,237.7. At the same time, I would also be placing a take profit. And the take profit is another sell order, but now this time it would be a sell limit order. So I'd be placing both of these trades. So I got in here, and then straight away I'd be placing this sell stop order and the sell limit order. And what happens is either price is going to go down here and we're going to get out and we're going to lose a little bit of money, or it's going to come and it's going to go here and we're going to make money. So that's the notion of these different sort of orders, is they are there so that we can continue with our day, maybe go play some soccer, watch some TV. And we know in the most optimistic sense, I'm going to make some money. And in the most pessimistic sense, I'm going to lose money, but I'm not going to lose a lot of money compared to how much I could lose if things went completely south. Think about those people who bought Bitcoin at 65,000. Now it's 28,561. Their positions have taken a real hit. And if they had this sell order for a stop loss, they could have lost less money, and then they would have a lot more money to now buy now at this current market price, and then wait until 60K to sell again. So that's the basis of these different orders and how to use them. So thank you so much for watching, and if you still aren't quite sure how these orders work or what they are, I've made a video on that and you can watch that video over there.